Welcome to Reshair on ESPN 730. For the next hour, your host, Chris Reshair, will bring fresh air to your financial needs. Excite, educate, and empower you to make sound financial decisions. Chris is a seasoned licensed mortgage consultant with NFM Lending. Originator license number 117266. Now, here's your host, Chris Reshair.
Good morning, Charlotte. Chris Reshair here, licensed loan officer with NFM Lending, back again for another round of Reshair Radio. If you have never listened to our show before, thank you for tuning in today. Our show really is about educating, exciting, and empowering Charlotte teens to make sound financial decisions. And we do that not by me talking about mortgage lending, because that's what I do every day, but by bringing in area experts or local experts that talk about real estate, talk about finance, etc., and also bringing in expert contributors that are grateful supporters of our show. And we've got a great expert contributor here in the studio with us today. So what I'd like to do normally is kind of intro our guests so that you know who is in our lineup and give you a little bit of background on them. And then we'll dial into our themes for the day so that you feel educated through our show. So anyway, what I'll do without further ado is introduce first our expert contributor, Jay McElveen with Goosehead Insurance. Jay, welcome back, man.
Honored to be here, Chris. Thanks for having me.
Awesome. So Jay, why don't you tell our listeners here this morning what Goosehead is about, basically, and what you do and how you can help our listeners.
Absolutely. So Goosehead is a company out of Texas. I have my own franchise with Goosehead called the McElveen Agency. I have a platform of about 40 carriers, 40-plus carriers, so we have an option for pretty much every risk. Goosehead is all about sense of urgency. We are about re-quoting our clients a renewal to keep your premiums down and make sure your coverages are correct. I said, across a large platform of carriers rather than just one carrier.
Right. That's awesome. And I think we're going to talk a little bit later in the show, kind of the Goosehead difference and really break down what some of those things look like.
Absolutely.
So, awesome. So if there's anybody that has any insurance needs that needs to contact you throughout the show as they're listening, Jay, what's the best number to get you at?
Best number is 704-453-0456, and that's my personal cell phone, so you can reach me anytime.
Sweet. Awesome. Well, more to come from Jay here in just a little bit. Let's go ahead and introduce our special guest here in the studio, Jenn Turner with Costello Real Estate and Investment. Jenn, welcome to the show.
Hi, Chris. So happy to be here today.
Yay. So glad to have you here. So we have an exciting show planned. We spent a lot of time sort of prepping, and I've never done a show quite like the one that we're going to do with you here and your expertise in the studio. But before we kind of break down our theme and really get into what we're going to talk about today, what I'd like to do is maybe give our listeners a little bit of background on you. So obviously you work with Costello Real Estate and Investment. You're a licensed realtor, I think just under 4 years. So you've got good experience, and you're licensed in both states?
Yes, I am.
And we assume everybody in Charlotte knows both states is North and South Carolina, right?
That's right.
So, well, that's good because there's a lot of people that want to cross the border for whatever reason. But so tell us, I'm all about really kind of getting the story out. What really got you started in the real estate business?
Okay, so all the realtors I've ever had in my past when buying and selling a home have told me that I need to do this. I should be a real estate agent.
I wonder why they said that.
I'm really not sure.
You're
I
not
know.
sure?
I think they saw. No.
Give us a hint. Why do you think they told you that?
I think because they saw something in me that I wasn't ready to see just yet. Most of the time, I led them through the process of me buying and selling my homes.
Okay, got it. So, and then how did those maybe suggestions or urges from these individuals get you here?
So before this, I was teaching, which I absolutely love doing. But I was ready for a change, and when it was time, I met with one of my real estate colleagues, had a 3-hour lunch, and thought there is no better career for me than real estate.
Wow. So I don't know if you know this, but prior to me getting into mortgage, worked for the school system as well. And I don't know that I had that kind of experience where I had a 3-hour lunch with a friend that said, you got to do mortgages. But it did sort of naturally lend itself. I grew up in a background where my dad was a contractor. My wife particularly loves looking at houses, and we're just always talking about real estate. Yeah. But ironically, maybe not ironically, but I knew I didn't want to work every weekend. So I thought, well, I could be a realtor, but I think I want to go on the mortgage side because I have maybe a little bit of time protection.
Right.
Not always, but I think, in your field, I think it's a tough field because there is no such thing as a day off. I mean, people call you on Halloween. People call you on Thanksgiving and say, I just found this house online. Can you show it to me now? And you're cooking your turkey. And you're expected to just, drop everything and see houses with people, right? That's what people expect of you. It doesn't mean you will. But nonetheless, so that's how you got into it. You were a teacher prior.
Yes.
Obviously, I can't speak for all teachers, but a lot of teachers are organized, right? They see the big picture, but they're good with the details because when you're teaching children, you've got to walk them through a lot of details, but then you have to show them big picture. And real estate is very much a detailed and big picture event.
It is,
right?
absolutely.
Because the big picture is, I want to buy this house, but there's so many factors that go into the details of getting that home and navigating it successfully, which is why probably those that you knew your realtors before said you would be really good at this because you're thinking about the details, but you're thinking about the big picture.
Yes. Yeah,
Awesome.
I agree.
So, all right, cool. So what do you like most about being a realtor?
I love that every day I meet new people and I get to help those people. No two people are ever the same. No two people are ever looking for the same kind of home or in the same situation. And I love that I just get to pour myself and my knowledge into helping them.
It is fun. I think, I've done this business for almost 20 years. That's one of the things that I get the most satisfaction out of being a loan officer too, is that I actually prefer to help people that want to be helped. And it sounds like a really strange statement, but if you've bought and sold 17 homes and you're buying your next house at $700,000, you don't really treat the professionals you're working with like you really need help because you kind of act like you know everything.
Right.
And sometimes those customers are really hard to please.
Yes.
Right? When you're working with a more entry-level buyer, they appreciate what you do. And that really feeds my sort of sales spirit, if you will, or just the way I like to do my business. All right, well, cool. So helping people, that's good. So why don't you take a minute and describe to us what you feel is happening in the real estate market. You can go whatever angle you want, but we'll kind of see where we go.
Okay. Well, in Charlotte, we definitely have a booming market, wonderful for sellers, but you have to be in mind that it's at certain price points. The certain price points, homes are going to be flying off the market. They're going to be in multiple offers, but those higher price points are going to be on the market still a little bit longer. Okay.
So your perspective is our real estate market locally is strong, right?
Yes, absolutely.
And if you own a home already and you are going to sell your home, if you are in a certain price point, and I'm just going to throw a number out and I could be way off, but generally speaking, I see that $300,000 range or under is usually the hottest, where we see the most number of buyers trying to bid on the same house.
Absolutely.
Could be a little higher, could be a little lower, depending on what part of Charlotte you live in, because there's definitely pockets of Charlotte that are hotter and pockets that aren't. That is always the case in any real estate market. But once you start getting into that higher price range, of course, your pool of buyers is smaller.
Right? Exactly.
And as a result, you may not have as many people bidding. There might not be that frenzy that we really have seen probably consistently for about 3 years now. We've seen a multiple bid market where buyers are trying to buy or contract on a property with multiple other buyers. So, all right. So overall strong market.
Yes.
Any other thoughts around the market that maybe we haven't talked about yet?
Not that I can think of right now.
All right. So that kind of covers it. Okay, cool. So great. Well, what I wanted to do is we've got a few more minutes here before we take our first break, is sort of jump into what our initial theme is. And we're really going to be talking about 10 key concepts a first-time buyer must know before they shop for a home. And this is interesting because I've done a lot of shows, Jen, on here are the 7 things you need to do to your house to get it ready to sell, right? Or here are the biggest mistakes that first-time buyers make. But really what we're going to be explaining is concepts, right? Taking a conceptual approach to our theme here today. And that is, we say things like multiple bids, right?
Right.
But if you're listening to our show out there, you might not know what we're talking about when we say multiple bid, right? And so there's lots of terms like due diligence and earnest money and et cetera terms that we throw around because they're just everyday words that we use, but they're
Right.
very industry specific.
They are.
Right?
Yes.
Like due diligence, what does that mean, right?
Yeah.
And so we're really going to spend today's show breaking down 10 key concepts that if you are a buyer, that you really need to understand these concepts, and they will prepare you for a successful future purchase of your first home.
Yes.
Is that right?
That is absolutely right. Yes.
And we sat down to prepare this show, and Jen's like, I don't know what we're going to talk about. And you kind of really went through your philosophy and how you operate as a realtor when you work with buyers. And it literally popped onto the page.
It really did.
And it's so interesting because I meet with realtors on a regular basis to feature them on Reshair Radio. And we don't always know what we're going to talk about, but it popped on the page. It really took us no time. And I think we have a super, super exciting show. So if you are listening to Reshair Radio for the first time, I'm your host, Chris Reshatar, licensed loan officer with NFM Lending. And I actually am a specialist in mortgage lending. So if you have any questions about the home buying process and you might need a mortgage loan, I want you to give me a call, right? Give me a call at 704-277-4463. That's 704-277-4463. My goal is to try to help buyers just like you out there driving around or listening here Sunday morning that might be in need of refinancing because you need to take some cash out to improve your home. You might need to move up to a new home because you're outgrowing or need a new property for better work proximity, whatever it might be, or you might be downsizing into a smaller home. Those are the kinds of things that I can help you with. So again, we've got a great show lined up. We're going to be right back here talking about the 10 key concepts a first-time buyer needs to know before they shop for their home with Jenn Turner here, Costello Real Estate and Investment. Stay tuned. We'll be right back. Hi, this is Chris Reshatar, host of Reshair Radio and loan officer with NFM Lending. Is home buying in your future? Buying a home is one of the most significant financial decisions you will make in your life. Each step in the process is important to ensure a smooth transaction. But the most important step, even before you look at houses or call a realtor, is to get pre-approved. A pre-approval is when a lender evaluates a loan applicant's eligibility for a home loan. The loan officer collects information such as their employment, income, assets, and current expenses. The lender then gives the applicant an idea as to whether or not they could afford a home loan or an approximate amount of loan they could qualify for. If you're looking for platinum level service and open communication through the loan process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO license number 117266, corporate license number 2893. Go to nfmlending.com for licensing information, or you can apply online today at themortgagegenius.com.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with NFM Lending. So glad to be back here. If you were just listening to our show, thank you for staying tuned. If you're just tuning in now for the first time, we are actually talking about today, our theme of our show is 10 key concepts that a first-time buyer must know before they shop for a home. That means before you say, I need to write an offer, you need to know these key concepts that we're going to talk about. We've got Jenn here with Costello Real Estate Investments. We introduced you earlier, Jenn, but we want to kind of jump into our theme and really lay out the 10 key concepts that you really felt are important for buyers to know before they get in the car with you, before they waste their time, before they spend money, because buying real estate costs money. And this really kind of really dovetails nicely into the first concept that we want to explain as a first-time buyer that you need to understand. The first one is called due diligence. We use this term regularly on our industry, but tell us, what is due diligence for somebody that's buying their first home? What does that mean?
Okay, so due diligence is a fee that you pay to the seller, and it allows the seller to take their home off the market, and it gives you the opportunity to do your inspections of the home, survey of the home, have your appraisal done, do all the research to make sure that this is the home that you want to move forward and purchase.
Perfect. That's perfectly described. And what I'll say is, to reiterate, is you're actually writing a check.
Yeah.
And that check is going to be cashed and is going to come out of your account the minute you write that contract, if it's accepted, of course.
Right.
And that money goes to the seller, because what they're going to do is they're going to uproot their family, their life, every time that somebody wants to go see that house, or you want to go in and measure for furniture. They are exiting the house, taking their dog to a kennel, taking their kids to the neighbors. You're really asking them to stop marketing their home so that you can determine if you want to buy that house. That's called the due diligence fee, but it's really a period of time, or a due diligence window, right?
Correct. Yes.
That you have to do that initial investigation. So what are the typical costs?
It typically is however long you're going to take the home off the market, what the seller would be paying for their mortgage payment. You kind of want to give them...
So if I had a $1,000 mortgage payment,
right,
and I had a 2-week due diligence window,
then $500 would be the due diligence that you would be paying.
Okay, or if I asked for a 1-month due diligence, then I would give that seller approximately $1,000.
Correct.
Okay, so there's not necessarily a fixed amount.
No.
It's just negotiated when you write that initial contract, and I'm assuming you, as the buyer's agent in this case, are going to do what you can to negotiate that fee as low as possible.
Exactly.
But still be respectful.
Right.
So that your buyers get the bid.
Yes, because you don't want to insult them either.
It's a dance.
Yes, it is.
It's a dance. Awesome. All right. Well, that's due diligence. Again, it's money that you write a check for as a first-time buyer. You've got to have money in your account when you go to buy a house, because it costs money to buy real estate.
Yes, it does.
All right. So let's go into money topic number 2, which is called earnest money deposit. This is actually a term that's been around for really decades, right? The due diligence is a newer concept in North Carolina. Earnest money has been around for a long time. And, when you go to get an apartment, you pay a security deposit. When you go to buy a house, you pay an earnest money deposit. Tell us about what it is and how it works.
Okay, so it's the money that you agree upon in the contract to give to the seller. It's kind of like saying, I've got some skin in the game. I'm serious about buying your house. And that way it shows them that you're paying up front. The money is held by the closing attorney or in another real estate's escrow account.
So really, you're going to write a second check.
Correct.
Okay. And if I'm wrong, correct me if I'm wrong, but that money is cashed right up front. However, should you decide not to buy the house during that due diligence window, and let's say we use that 2-week example.
Right.
So you order the appraisal on the property, you do your home inspection, you get your loan approved. Perhaps you find out that the house is infested with termites, right?
Yes.
So yes, your check was cashed for that due diligence, or that $500, the seller gets to keep that.
Right.
But the earnest money check that you write, that second check, would be refundable because you cancel the contract before that due diligence date.
Yes, and that's what's very important. You don't want to go past that date if you decide to back away, because then the seller would keep your earnest money.
Right. So we're talking about money that you're spending up front, but we're also talking about timelines.
Yes.
So the due diligence fee comes with a due diligence timeline.
Correct.
The earnest money fee comes with, or is attached to, that due diligence timeline. So let's say, Jen, your buyer had that same due diligence window of time, which of 2 weeks.
Yep.
They wrote their $500 check for the due diligence, and then they wrote $1,000 for the earnest money. Mm-hmm. It's been now 3 weeks since the contract, and your buyer gets cold feet, and they decide they don't want to buy the house anymore. What happens to the earnest money check?
The earnest money will go to the seller.
Okay, so it may be held by the attorney or the real estate company, but once you pass that due diligence date, that 2 weeks that you get, 5 p.m., right?
Correct.
Then that earnest money is now forfeited and goes back to the seller as well. So really tricky concepts perhaps to explain over the air here, but we are doing the best that we can to make sure that you understand these concepts. And my phone's going nuts. Sorry, folks. Here we go. Anywho, we will go ahead and kind of roll to the next one, right? Which is the home inspection process.
Yes.
So what is the home inspection? Because people get confused, home inspection, appraisal, etc.
Right.
Tell us what a home inspection is all about.
Okay, so home inspection, very important. You don't want to buy a house without having the home inspected. The home inspector will meet you at the house, and the buyer's agent should also be there with them. They do a detailed inspection from major to minor items, full-blown everything. They're checking every room of the house from the roof all the way into the basement, crawl space.
Outlets to see if they work, faucets.
Plumbing, electrical, mechanical, the HVAC system, how's it working? Does it work better on the first floor than the second floor? Because that could be a tale of something wrong as well.
Absolutely. It's kind of like, the mother-in-law checking out the future son-in-law,
yes.
right? We check over everything.
Everything.
Exactly. Make sure this is going to work.
Yes.
All right. So that is the process. What do they get that tells them that information?
So they get this huge multi-page report that breaks everything down for them and lets them know things that are major concerns, minor concerns, and things that also they might just want to keep checking on.
Things to monitor.
Thank you.
Perfect.
Yes.
So let me ask you this before we kind of go into explaining what the cost could be. What do you see a first-time buyer often misunderstand about the home inspection process? Probably that there's going to be a lot of stuff
that's wrong with the house,
right.
or that they're going to scare them and they're not going to want to buy the house.
Right. So how does that typically work when you see it?
When I see it, I explain. We sit with the home inspector and we go over everything together, and then I use my knowledge as well to explain to them, listen, these are our major things, and we can go to the seller and we can submit a repair request and ask that they repair these things before you buy the house. So you're not buying a house with a whole bunch of things that need to be fixed. Perfect.
And what I've seen is, and I apologize for throwing you on the spot there, but really at the end of the day, we're talking about key concepts that a buyer needs to understand. And embedded in the home inspection process concept is that you need to understand that you're going to get a 50-page report on this home no matter what home you buy, whether it's new, old, renovated, not renovated. The home inspector is paid to find issues with the house, and they will find them.
They will.
They will find them. And the seller could have had their own inspection done, had everything fixed, and a different inspector is going to come in and still find a long list of things that they think need to be fixed.
We see it all the time.
It's still an opinion. This is normal. Don't freak out.
No.
Jen will hold your hand through the process and tell you which items really are of major concern. Because I do see a lot of first-time buyers that they will put the brakes on unnecessarily because they don't understand that it's normal for every home to have. I mean, they'll literally put on there things like there's a light bulb burned out.
Correct.
Right? And you're like, what? What are we going to... We don't want to buy this house. There's a light bulb burned out. What if there's a major electrical issue in this house? When in reality, it's a 99-cent bulb that needs to... that's all we need to worry about. But a first-time buyer doesn't know.
Right, exactly.
So what are the typical costs of a home inspection?
So anywhere from about $350 to $700, just depending on the size of the home.
Right, a bigger home that's got 5,000 square feet, it's going to be $500, $600, $700,
Exactly.
Right? And then there are add-on features too, right? So if you want to do a radon test or do some sort of specialty inspections, or sometimes they have these infrared guns that can tell you if there's moistures behind the wall. There's all kinds of bells and whistles that you can include in your inspection. But of course, that all costs money, right?
Exactly. Yep. It adds up.
Perfect. So the next one is the home appraisal.
All right.
Why don't we talk about that one?
Well, Chris, I think you should explain that coming from the lending side.
All right. I'm happy to take it. So, I will tell you, just like if you buy a diamond ring for your future wife, right? If you're going to spend $4,000 on a ring or $10,000, some great people pay crazy money for rings today.
Yes, they do.
Jay, didn't you do that? Yeah.
Thanks for reminding me.
Yes, that's right. Anywho, so if you're going to spend $100,000 or $200,000 to buy a house, we're also going to make sure, the lender that is, going to make sure that when you spend that kind of money, that if the bank is going to lend you the money, that the home is worth the $200,000 that you're going to pay for that property.
Right.
Okay, and that's called the appraisal or home appraisal. So typically what you do is you will do your loan application way before you shop for a home, and you call Team Reshatar at 704-277-4463. We get you qualified. We put you in the car with Jen after you're set. We order the appraisal only after we have the contract on the home and you have signed your loan document saying you want to proceed. When we do that, we initiate the appraisal order, and it's done through a third-party management company. So what I'd like to do is talk about this home appraisal process in a little more detail, but believe it or not, we have to take a quick break because we have our supporters that are supporting Reshair Radio that want to make sure they get their airtime. So anyway, we are here talking in the studio again. We're talking about the 10 concepts that a first-time buyer must know before they buy their home, and we've got Jenn Turner in here with Costello Real Estate and Investment. So stay tuned. We'll be right back. We've got more to chat about.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshatar with NFM Lending, licensed loan officer, and we are here in the studio talking about the 10 key concepts that a first-time buyer must know before they buy a home. That's not during the process. That's not after. You need to understand these things before. You need to give me a shout or give Jen a shout, and we will walk you through these concepts in person, but you can listen to this show back. We've got a great show here lined up. So we were talking about concept number 4, which was the home appraisal. That is when the lender initiates a third-party company to order the appraisal on your behalf and the lender's behalf to make sure that the house that you're buying for $200,000 is truly worth that. Because Jen, what we see sometimes is that you may be bidding to get that house for $200,000.
Right.
You may be competing against 5 other buyers. You win the bid. Maybe you had to agree to pay above the $195 asking price, and you decided to agree $200,000.
Yes.
We send the appraiser, and the appraiser comes back and says the house is only worth $195. What do we do? Do we freak out? Yes, everybody freaks out, and then Jen and I get everybody calmed down.
Yes.
And we figure it out.
Right.
We keep the train on the track. So let me explain briefly how that works. So the appraisal report, just like the home inspection report that we mentioned earlier in the last segment, the buyer gets a copy of that. By law, the lender has to issue a copy of that appraisal 3 days at minimum before closing. That is federal law. Usually it's well before the closing date. If it appraises for the value that you negotiated on your contract, then everybody's happy.
Correct.
If it came in lower, then it's an opportunity to potentially renegotiate.
Exactly.
Right?
Yep.
And we have lots of different angles that we will work through if that ever happens to you. If it appraises for more, which sometimes happens,
does.
I've had that happen a couple times this last week, then you're stepping into immediate additional equity above and beyond what you're paying for the house. And generally speaking, costs about $475 maybe to about $525 for a standard conventional FHA appraisal. If we're talking a mega home on the lake, it will be $700-800.
Right.
So great. So let's move on to concept number 5 in terms of things that you need to know as a first-time buyer. And the next one is a pest inspection, sometimes known as a wood-destroying insect report.
Yes.
Tell us about that.
You're definitely gonna want to have a separate pest inspection company or your home inspector to evaluate your property. The main thing you are looking for, most people think of, is termites. You don't want to find any
Correct.
termites in your home. However, they're also looking for mold, fungus, and carpenter ants, carpenter bees, anything else that could cause damage to the house.
Correct. So we're looking for pests and fungus among us.
Yes,
Right?
I love it.
All right. Great. And how much does that typically cost?
Anywhere from about $75 to $100.
And the buyer pays that fee as a part of their regular closing costs.
Yes, they do.
Along with the home inspection and the appraisal that we discussed earlier.
Yes, it.
All right. And the due diligence and the earnest money. See how this is adding up, folks, right?
Right.
So real estate is fun and exciting when you shop online for something on Zillow that looks really great. But you need a local expert like Jenn to kind of walk you through these steps to help you understand all these great concepts. So, all right, let's go to number 6. What's number 6?
Oh, number 6 is points, discount points. And Chris, I think you need to explain what points
Yeah,
are.
this is the fun part. So I actually met with some first-time buyers earlier this week that were super cool. And they asked about, well, what can we do to get our payment down, Chris? And I said, well, that's a great question. There's lots of ways that we can craft your loan and want to get that payment down. But one of the key ways is to consider paying a discount point or an origination point. I will tell you that you could talk to multiple companies, lenders, banks, credit unions. Sometimes we use these terms interchangeably, so it gets a little confusing. That's why you want to call me if you have any questions. Even if you're doing a loan with another company, as a public service, I am happy to answer any questions for any of you out there at any time related to your loan process. My number is 704-277-4463. That's 704-277-4463. So we were just discussing that concept of a discount point or an origination point. We'll illustrate it by an example of a $100,000 loan. So if you're borrowing $100,000 from your mortgage bank or me at NFM Lending, 1 point would be 1% of that loan amount or $1,000. One discount point would be 1% of the loan amount or $1,000. So sometimes the term origination point and discount point can be used interchangeably, but you're paying that $1,000, and essentially what it's doing is it's buying you an interest rate that would be lower than if you didn't pay that point. So if we gave you an option without paying the $1,000, your rate would be a little bit higher. If you decided to pay 1% of that loan amount in a form of a discount or origination, then your rate would be lower because you're paying a little more up front to get a lower rate. And generally speaking, every customer's math is different, but generally speaking, it takes about a 4-year window for that break even.
Yeah.
So a lot of times I have a conversation with that buyer. Hey, how long do you plan on staying in this house? Because if I do the math, it's going to save you approximately $30 a month in payment, but it's going to cost you $1,000. We run the break even. Maybe it's about 4 years. So I inform my first time buyer that if you plan on staying here long term, then you're going to save $30 a month for the remaining term of your loan. We don't always know how long you're going to stay there, right?
Right.
But that's how we do the math. And it's an important concept to understand when you're buying a house because, again, lenders throw these terms around. You sit around the Sunday dinner table and grandma starts talking about loan officers and mortgage loans and points, and your dad says you got to put 20% down to buy a house, which is not true. It's just like when you get married and you have a baby, everybody has an opinion, right? And want to give you your 2 cents. When you buy a house, you're going to get the same thing, and you're going to get concepts either old or expired or not accurate. That's why you need to come to me when you have questions. So good stuff. Let's move to concept number 7 on what our first-time buyers need to understand. Concept number 7, we're going to throw over to our expert contributor here, Jay McElveen with Goosehead Insurance. Jay, tell us about homeowners insurance. What is it, man?
Thanks, Chris. Homeowners insurance has a lot of different aspects to it. Homeowners insurance covers the dwelling itself, but there's several coverages with homeowners insurance, and that's why I like to talk to clients for a few minutes just to have a discovery call with you to see what you really want and explain each coverage with you, because 90% of clients have no idea what their homeowners insurance means. They just know it's an insurance policy, but when it comes to claim time, they file a claim and they care a lot. So they're not so interested about what they're paying. They're more interested about the coverages. But when they first start, they care about what they're paying and not the coverages. So it should honestly be flip-flopped. But I like to tell clients, most homeowners policies, we do have a lot of options, and we usually are the best priced, but at the same time, because we have so many options, but at the same time, I don't want you to look at the bottom of the page and compare 5 different quotes and just say, okay, the one that's the cheapest is the best option.
Right.
Because it's usually not. It's probably because that agent is undercutting coverages or not insuring you right. And if you go to closing and say, well, I'll just lower my coverage just to get closed, you can't do that. Because if you do that and your home burns down the day of closing, you're up the creek.
Right.
And so you want to make sure you have the right coverages at closing, and we work with you to get that possibility to happen. So I'm going to make sure I'm going to give you a lot of options and give you the absolute best we can. But homeowners insurance, like I said, it has a lot of different aspects and it includes a lot of different coverages. So when we have that conversation, I just like to have 10, 15 minutes of your time, and we'll go from there, and I'll explain each coverage in depth.
Absolutely.
Exactly what each of them means.
And this is a great opportunity for me just to kind of give a little testimony for you, Jay. I can't speak. I know you've got a lot of mortgage people that support you in our local market and a lot of real estate agents that do as well. But we try to give you every single policy possible. We try to get our clients to talk to you well early in the process. And believe it or not, not a lot of buyers understand that you actually have to have your insurance coverage in place before the due diligence window, because there are rare cases when there have been claims on the property that could affect the buyer's ability to secure a policy that's competitive. And if the due diligence window is up, it doesn't matter. Your money's gone, right? If you change your mind and find out that there were 2 or 3 claims on that property that affect the insurability of that home, you got to get that insurance early. And Jay has done an amazing job working with our team and really just giving, you are usually the lowest, but I don't really care about the lowest, right? I need to know that when I refer my clients to you, that one, you answer the phone, that you're responsive, that you're professional, and that the coverage is good, right?
Absolutely.
Those things are way more important to me because you're a reflection of my business, right? Yeah. I have a reputation, a big reputation to keep, and I got to make sure I'm working with solid professionals. Jay is a top-notch A-plus insurance guy, and we love the work that he does at Goosehead. Jay, real quick, can you give them your phone number? Because there are people out there, whether you have a policy on your current home, let them run you an annual quote. He could probably save you money. If you're looking to buy a house in the future, Jay's your guy. Give them your number real quick.
Thanks, Chris. My number again is 704-453-0456. And you can contact me anytime, as that's my personal cell phone.
Perfect. Sweet. Well, we're going to jump into the very last concept for, actually, not the very last concept. Let me just wrap this one up. Generally speaking, I want my buyers to understand this, our listeners, that when you get an insurance policy on a typical home in the Charlotte market, which is in that low 200 range, your premium typically runs from $600 to $900 a year. Again, I am not an insurance agent. Jay is, we can't give you an exact quote, but I'm trying to give our listeners just a general range. What can I expect? So I had a gentleman recently, his policy came in at $1,400 and Jay was able to come in significantly lower. And I said, this just seems a little out of whack. You need to talk to my guy. And he got their premium down much lower. So that's the general range. So I think what we'll do is we're going to take a quick break here because we're kind of rounding out this segment before we jump into the next concept, which is actually escrows or prepaid expenses. We probably need to start the next segment fresh on that concept.
That's right.
But we've talked about a lot of great stuff. Again, our show really today is about 10 key concepts that first-time buyers need to understand. Here in the studio, I've got Jenn Turner with Costello Real Estate and Investment. We've been talking about a lot of these key concepts, and Jay McElveen with Goosehead Insurance are helping me along. So if you hear anything in this process you want to know more about, whether you need an agent to help you, you need a loan officer like me to help you with your purchase, or you need insurance, you can give me a shout at 704-277-4463. That's 704-277-4463. You can also find me at themortgagegenius.com. Again, you're listening to Reshair Radio. We've got one last segment. Please stay tuned. We'll be right back.
Hi, this is Preston Sandlin with Home Inspection Carolina. We do home inspections, termite inspections, radon testing, any of your inspection needs. One thing that we do a little different, we fix the small stuff instead of putting it on the report. So if you need a home inspection, termite inspection, radon testing, please give us a call. If it's a home inspection or a pre-inspection, 704-542-6575, or check out our website at homeinspectioncarolina.com.
Hi, Chris Reshaar here with NFM Lending and host of Reshair Radio. If you are considering purchasing a home, you may wonder what your financing options are. We offer a variety of loan products to fit your situation, including conventional, FHA, VA, USDA, and jumbo loans. Here in the Carolinas, some of the most common loans are FHA and USDA. FHA loans are popular in low-income and first-time buyers due to their less stringent requirements. They also have low down payment requirements and tend to have a lower credit score requirement as well. USDA loans also allow low and moderate income households to purchase homes in an eligible rural area. Home buyers who do not qualify for a conventional loan may be able to purchase a home with USDA. If you're looking for platinum level service and open communication throughout the process, call me, Chris Reshaar, at 704-277-4463. That is 704-277-4463. LO NMLS license number 117266. Corporate NMLS license number 2893. Go to nfmlending.com for licensing information, and you can apply online at themortgagegenius.com. Welcome back to Reshair Radio. I'm your show host, Chris Reshaar, licensed loan officer with NFM. And we are here in the studio today talking about the 10 key concepts that a first-time buyer needs to know. Jenn Turner with Costello Real Estate and Investment, got tongue-tied there almost, is really the person that came up with these great concepts with me as we prepared for the show. We've talked about 7 different concepts up to this point, Jenn. Knocked them out, and people can listen back to our show on reshairradio.com. Reshairradio.com. We've got all of our shows posted there. But let's go ahead and wrap up the 3 last key concepts. Key concept number 8. Do you want to kind of throw that one at me?
Sure, I'd love to. This is escrows and prepaids. What can you tell us about those, Chris?
This is so exciting. I know. If you're driving, please try to keep your eyes open, okay? But we wanted to make sure that our buyers understand what an escrow account is or prepaying expenses. So oftentimes I get a phone call that says, hey, Chris, what are the closing costs? Well, there are 38 different costs that go into into what your overall costs are going to be the day of closing on top of your regular down payment.
Yes.
And it's not a one-word answer. It's not a one-number answer, right?
Right.
But part of the closing costs, and we mentioned earlier, an appraisal fee is part of your closing costs. We mentioned earlier, a home inspection fee is a part of your closing costs, right? The termite report is a part of your closing costs. The escrows is really typically when you get a mortgage loan, you're required to pay your insurance premium up front, who Jay talked about that earlier, for 1 year, because the lender wants to make sure you have coverage for a full year. You're also going to pay a portion of your property taxes, typically 4 to 5 months into the escrow account, okay? And then you're going to pay interest through the end of the month. So if you close on the 15th of the month, you're going to pay interest on that future loan through the 30th. And we'll have to go into detail more, one-to-one. But really, at the end of the day, you're taking money out of your pocket to pay for your future tax bill, to pay for your future insurance coverage. You're prepaying these things so that you have coverage and money in the escrow account to then pay toward the next year's tax bill, to then pay towards the next year's insurance bill, and to pay interest to that mortgage lender, since there's a lag time and from when you close to when you receive your first payment. So ironically, your closing costs on your loan, for example, could only be $3,500, but depending on your prepaid expenses, a year of insurance up front could be $800.
Right.
You could have tax prorations for 5 months, could be another $1,200, right?
Yeah.
And then interest could be another $250. When you add that up, it's another $2,250 on top of your $3,500 in closing costs. So when you say to me, Jenn or Chris, hey, well, ask us, what are your closing costs? Well, your closing costs might be $3,500, but your prepaids may be another $2,000 and change. But it still feels like a cost, right?
It does, yes.
And you still need to have the total in your account before you go to closing, not just the closing cost portion.
Correct.
You have to have those prepaids set aside. So I just threw out what some of those examples might be. All of this are just conceptual ideas that we're trying to share with you, but you will be prepaying these things. It really kind of boils down to, as a part of your overall cost to buy a home, even though
Yes.
technically it's not a closing cost because it's a prepaid expense.
Correct.
Right? It's not money. It's money that you can technically get back if you win the lottery and pay off your mortgage.
Yes.
Right?
Be great.
But you're not going to get back your appraisal fee if you pay off your mortgage.
Right.
Right? So that's where the difference lies. You're prepaying them. They can technically be refunded under certain circumstances if you were to sell shortly after you bought it for some crazy reason.
Right.
All right. So let's go to concept number 9. Title insurance. This might be one we have to take on together.
I think so.
Do you want to start or you want me to start?
I'll start us off. So title insurance is required by the lender, and it is required. It's a policy that ensures that if a prior owner had a lien or a tax bill that is attached to the home, the insurance would cover or protect your interest in that home. Maybe you can elaborate a little bit more for us, Chris.
Sure. So really what that means is just like when you have title on a car, you receive title to the property. Technically, it will be held by you and the lender because the lender is lending you the money. So you won't have a clear title until the lien is paid, right?
Right.
But when you buy a house, you want to make sure, or the attorney that you hire will make sure that there are no judgments, liens, any sort of encumbrance that would stop that ability of the seller to give you that title without any remaining liens, because once you become the owner of the home, anything attached to it belongs to you. If you buy a car that has a salvage history, the salvage history doesn't go follow the person that sold it to you. The salvage history follows the car that you buy, right?
Right.
So anything that's stuck to that title, the attorney is going to make sure that you don't have anything that transfers to you. However, it doesn't mean there aren't mistakes in the process. Okay.
Yeah.
So maybe something shows up on the title to that property. Perhaps the original landowner that subdivided the property and sold it to some major builder with 1,000 lots on it.
Right.
You find that some sort of $500,000 lien shows up 5 years after you've owned the home. When you go to sell it, well, guess what? You own the property.
Yeah.
You have to pay that lien if it's truly a lien.
Right.
Title insurance kind of steps in as the savior, if you will, and says, no. We had an insurance policy. Our buyer does not have to pay that lien. We'll research it out, prove that it was probably already paid. In most cases, issues that show up were resolved, but just weren't properly documented.
Yeah.
But in the case where in the olden days, you might not be able to sell that house now.
Right.
Because you got stuck with someone else's lien and you had no way to prove it and you had no insurance policy to protect you.
Correct.
So a long example, right?
Yeah.
But it's hard to explain that. And so the lender is going to require you as the buyer to pay for a policy that protects them, right? Because you could foreclose and there could be a title issue and they need to make sure they're protected.
Right.
But they're also going to, and we're going to encourage the buyer to get their own policy because they could win the lottery, Jen.
They
right?
could, yes.
They could pay off their mortgage and a title issue could still show up.
Right.
And then they don't have that coverage, right? So
Yes.
the policy is almost like a BOGO, right? You pay the lender's premium. It's a fixed amount in the state of North Carolina, and the owner's policy is very, very cheap. I see it range from $50 to $150. It's not a lot of money, but it depends on the size of your home. We can't quote exact premiums over the phone or over the air, excuse me, but you get the point.
Yes.
So, all right, let's go to the last concept here, which is
right.
home warranty. So I'm going to throw that one at you. That's really your department.
All right. So home warranty is something that a buyer can purchase on their own or get the seller to cover the cost of. And it's a warranty that protects the major or covers the major appliances or equipment associated to the home. So you just spent all this money to
Right.
buy this home. You get in the house and what do you know? The oven breaks. It's not working.
Or HVAC.
Or HVAC. And you don't have a home warranty. Well, then you're calling and you're paying all that cost to get that repaired up front.
Out of pocket.
Yeah. With the home warranty, you call the home warranty company, you arrange for somebody to come to your house and take a look, and most of those costs are covered.
Right. They'll ask you to pay a small premium typically to have
Like a
someone
service
come out,
fee.
which is usually way cheap.
Yes.
And then depending on the item, it doesn't always cover all of it, right?
Right.
If it's an HVAC system that was 15 years old, they're not going to cover all of it, right?
Correct.
Because the unit was going to die soon anyway.
Yeah.
But it may help cover some of the expenses.
Right.
So perfect. All right. And the typical cost for that typically runs about $500. So Jay, real quick, you've talked a couple of different times. I wanted you to just take a quick minute and talk about some of the differences that Goosehead Insurance offers maybe over a traditional carrier that you maybe offer over a traditional 1-800 number experience?
Absolutely. So Goosehead is a market disruptor, and we deliver expert advice at the market's best pricing. I like to think faster than anybody else. We have a rater built in our Salesforce that allows us to really run all these carriers at once rather than having to go each one. So we take the top carrier and we go into that carrier and we actually mold the quote to the client. I'm not just quoting your standard coverages. I'm actually looking at these homes for 4 or 5 different websites, and if it's over a certain value, I'll go out and inspect the home myself to make sure I am down to the penny and make sure what this is insured for and make sure you have plenty of coverage.
So do y'all hear that? He actually might even go out and inspect your property. Okay?
Absolutely.
You're not going to get that on a national website or an 800 number.
Right.
Experience.
We run a replacement cost estimator down to what kind of floors you have, how much carpet you have. You have 50% carpet to make sure it's down to the penny. I'm never going to, none of my clients are underinsured. So I like to say we have a concrete book and not a quicksand book. Every single one, when a client calls me for a claim, I have no issues. I have no worries because I know the coverages are there if we spoke about it. If there's a diamond ring on the policy that you own and you didn't tell me about it, it's not on the policy, of course, it's not going to be covered. But if I lose business to an agency that compromises on coverages, that's okay because integrity is everything in my book. I've lost plenty of deals and it's because the coverages haven't been there, and I'm okay with that. I just want my clients and the lenders to know that I'm so I don't take for granted their business and their trust. So integrity is everything for me, and the quote I give you is the absolute best I can provide, price wise and everything. I'm not going to give you middle of the road quote. It is the top price that came back. It is the every discount applied I possibly can. So I'm going to give you the best price I can.
honor roll,
absolutely, everything I can do to get you that premium down. I understand insurance is not fun to pay for. I pay for it myself. I get it, but no, the coverages are there. And the price is the best we can do. So I honestly appreciate any business. And
they can reach you real quick at what number?
At 704-453-0456.
Sweet. Thank you, Jay.
Thank you.
Jen, real quick, why don't you give people your number so that they can reach you and what your incentive is?
All right. My number is area code 407-748-5394. And I am offering an incentive of $500 credited to you at the closing, whether it be on the buy side or the sale side of your home.
You represent people that want to sell their home or list it for sale, and buyers as well.
Correct.
And not just first-time buyers, but any buyer across the spectrum.
Exactly.
You've been an awesome guest today. Jay's always great. Thank you for coming back.
It was awesome.
Here, Jay.
Pleasure to meet you.
I know. What a great
you did
concept.
Great.
What a great concept for our show. We're really super excited about. We haven't shared this one on our show before. I will just wrap up the show as I always do. I want to say thank you for listening to Reshair Radio. Appreciate your patronage. I will tell you again, if you are looking for any mortgage help, that is what I do. I specialize in that. My number is 704-277-4463. That's 704-277-4463. You can find me at themortgagegenius.com to do an online application, or you can listen to our show in its entirety at reshairradio.com. That's RESH, reshairradio.com. Thank you all. Have a great week, and we'll see you next Sunday.
Thanks, Chris.
Thank you, Chris.
Hi, this is Chris Reshatar, host of Reshair Radio and loan officer with NFM Lending. Is home buying in your future? Buying a home is one of the most significant financial decisions you will make in your life. Each step in the process is important to ensure a smooth transaction. But the most important step, even before you look at houses or call a realtor, is to get pre-approved. A pre-approval is when a lender evaluates a loan applicant's eligibility for a home loan. The loan officer collects information such as their employment, income, assets, and current expenses. The lender then gives the applicant an idea as to whether or not they could afford a home loan or an approximate amount of loan they could qualify for. If you're looking for platinum level service and open communication through the loan process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO license number 117266, corporate license number 2893. Go to nfmlending.com for licensing information, or you can apply online today at themortgagegenius.com.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home, or buying a new car, or applying for a credit card. Then it's too late, and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com. You've been listening to Reshair with Chris Reshatar, a seasoned licensed mortgage consultant, originator license number 117266. Learn more online at themortgagegenius.com.